Right now, the average American is paying $68,000 for a $35,000 car, and they have no idea it's happening. Hello and welcome to Money Machined, the money rules nobody taught you in school. We break down how credit, investing, taxes, and debt actually work, with real numbers, zero hype. New videos daily. The worst part? The dealership designed it this way. They've turned car buying into a psychological trap where you think you're getting a deal, while they're extracting nearly double the sticker price. Quick disclaimer, this is educational content, not financial advice. Past performance doesn't guarantee future results. Always do your own research and consider talking to a financial advisor before making investment decisions. Here's what they don't want you to understand. When you walk into a dealership thinking about monthly payments instead of total cost, you've already lost. The average car loan in America is now 72 months. 6 years. For a machine that loses 20% of its value the second you drive it off the lot. And that 20% drop? That's just day one. By year 3, your car has lost roughly 40% of its value. By year 5, when you're still making payments, it's worth half what you paid. But here's where the math gets truly painful. Let's say you finance that $35,000 car at 7% interest, which is actually below the current average. Over 72 months, you'll pay roughly $9,000 in interest alone. $9,000. For the privilege of borrowing money to buy something that's losing value every single day. But wait, we're just getting started. Remember how 72-month loans are now average. There's a dark reason for that. The longer your loan, the more likely you are to be underwater, owing more than the car is worth. And when you're underwater on a car loan, something dangerous happens. You can't sell the car without paying extra. You can't trade it in without rolling negative equity into your next loan. You're trapped. Here's what typically happens next. 3 years in, you're tired of your car. Maybe it needs repairs. Maybe you just want something newer. You still owe $20,000, but the car is only worth $15,000. That $5,000 gap? It doesn't disappear. The dealer's solution, roll that negative equity into your new loan. Now you're financing $40,000 for a $35,000 car. The cycle deepens. But we haven't even talked about the hidden costs yet. Insurance on a financed car, roughly 30% higher because you need full coverage. That's another $2,000 per year. Extended warranties the finance manager pushed. Add $3,000. Gap insurance they insisted you needed. Another $800. Dealer fees that somehow appeared. $1,200 more. Now let's add it all up and brace yourself. Car price, $35,000. Interest over 6 years, $9,000. Higher insurance for 6 years, $12,000. Dealer add-ons, $5,000. Negative equity from your last car, $5,000. Depreciation loss when you sell, $17,000. Total cost, $68,000. $68,000 for a $35,000 car. And that assumes you only do this once. Most Americans repeat this cycle every 4 to 5 years. Which brings us to the part nobody talks about, the opportunity cost. That $600 monthly payment? Invested in a basic index fund averaging 10% annually, it becomes roughly $500,000 over 30 years. Half $1 million. That's the real cost of financing cars the way dealers want you to. Not just the $68,000 you spend, but the $500,000 you never build. So what's the solution? Here's exactly how to buy a car without destroying your financial future. Rule number 1, never finance for more than 4 years. If you can't afford the payment on a 48-month loan, you can't afford the car. Period. Rule number 2, put down at least 20%. This keeps you from going underwater immediately and shows you actually have skin in the game. Rule number 3, buy used, ideally 2 to 3 years old. Let someone else eat that massive initial depreciation. You get nearly the same car for 30% less. Rule number 4, and this one's crucial, get pre-approved for financing before you step foot in a dealership. Credit unions typically offer rates 2 to 3% lower than dealer financing. But here's the ultimate solution that dealers absolutely hate. Buy with cash. I know, sounds impossible, but here's the thing. That $600 payment you were about to sign up for? Save it for 18 months instead. Now you have nearly $11,000. $11,000 buys you a reliable used car that'll last 3 to 5 years. Keep saving that $600 monthly. By the time you need another car, you're buying a $20,000 car with cash. No interest, no dealer markups, no underwater loans, no $68,000 mistakes. Just transportation that doesn't destroy your wealth. Remember that $35,000 car from the beginning, the one that really costs $68,000. Here's what the cash buyer pays. $24,000 for the exact same car, just 2 years older. That $44,000 difference? Invested over 30 years, it becomes roughly $700,000. That's not just car savings. That's retirement money. The dealers know this math. The banks know this math. They're counting on you not knowing it. They need you focused on monthly payments, not total cost. They need you thinking short-term, not long-term. But now you know the real cost. Now you see the trap. The question is, what are you going to do about it? If this opened your eyes to the real cost of car financing, we expose these hidden financial traps every single day. The kind of math that can literally change your financial future. See you in the next one.